Bitcoin has surged from $75,000 to $112,000 in what many believed was a clean, institutional-led rally. But Willy, one of the most trusted names in on-chain analytics, is now sounding the alarm about a potential inflection point forming in real time. In a detailed series of tweets posted on May 27th and 28th, Wu warns that we may be entering a pivot zone, a moment where the market could either continue its climb to new highs or face a short-term breakdown driven by speculative excess and profit-taking. On May 27th, Wu set the tone for his outlook by tweeting, "Speculation is going nuts on Bitcoin at a time when there's plenty of investor profits to take, SOPR. Reminds me of, be fearful when others are greedy. A lot comes down to how much buying happens this week when US markets open after a long weekend." This tweet is significant because it ties into one of Wu's core tools, SOPR, or the Spent Output Profit Ratio. SOPR measures whether coins moved on-chain are being sold at a profit or loss. When SOPR is high, it means a large number of coins are being sold in profit, which often precedes corrections as traders cash out. In other words, Wu is saying that there's an elevated risk of a sell-off, not because the fundamentals are weak, but because there's simply too much profit sitting on the table, and too many new players chasing it. That speculative fervor is being met with what Wu describes as an unusual pause in capital inflows. In a follow-up tweet that same day, he warned, "Our Bitcoin vector structure shift signal is showing first signs of a bearish pivot. Capital flows into the network were very flat the last 3 days. This is an unusual lull in buying on our run from $75,000 to more than $112,000. Here, Wu is referring to signals from Bitcoin Vector, the Swiss block-powered quant framework he's long endorsed. This isn't casual speculation. It's based on data that tracks institutional-grade flows, structural breakouts, and momentum dynamics. The implication is that while price has been rising, the underlying buying support has started to stall. In technical terms, this is a divergence between price and capital inflow, an early warning that the trend could reverse or consolidate. Let's break it all down. But before we dive in fully, please like this video, subscribe to the channel, and turn on notifications for future updates. Your support helps the channel grow and keeps our content flowing. Thanks, and enjoy the video. Willy isn't flipping fully bearish. He acknowledges the bigger trend still leans bullish, depending on what happens in the next few days. He writes, "Still, the broader picture is bullish with risk signal dropping. If buying follows through this week, $114,000 is next in line to liquidate shorts. But right now, there's an opening for a bearish pivot." The risk signal here is a proprietary indicator that Wu has frequently cited. A declining risk signal generally means market conditions are safe for accumulation, that is, buying outweighs selling. But the key phrase is, if buying follows through, because if it doesn't, the structure may break down and set up what Wu calls a bearish pivot. In his next tweet, Wu clarifies the technical setup. If we don't get further highs soon, Bitcoin will be setting up for bearish divergences on longer range charts at a time when capital inflows have been weaker than normal, with speculation running too hot. If that happens, we will need to wear out another wave of profit-taking. This is critical. A bearish divergence occurs when price makes a higher high, while indicators like volume or capital flow make a lower high. These setups often precede trend reversals. Wu's warning is that without a fresh push above $112,000 in the very near term, we could fall into a pattern where bullish momentum fades and profit takers take control of the market once again, much like what happened in prior mini-cycles. Fast forward to May 28th, and Wu revisits the theme, this time offering both reassurance and caution in the same breath. He tweets, "I have some good news and maybe some bad news for you. Good news, risk signal is trending downwards, meaning over the broader environment, buy-side liquidity is dominating. We are setting up for another solid run on the long-term frame. So, despite the near-term weakness, the long-term setup remains strong." Wu is essentially saying that macro buy-side conditions, likely driven by institutional flows and longer-term holders, are still in control. But again, that's only half the story. He followed up with this. "However, The strength of this bullish run from $75,000 to more than $112,000 is starting to break down. I covered this in my last post. This week is absolutely critical. If we do not get follow-through, then we will be up for another consolidation period. Wu is emphasizing that while the framework shows long-term strength, the short-term impulse is weakening. The 75,000 to more than 112,000 move was powerful, but it now appears exhausted unless new spot buying re-enters quickly. Without that, we're looking at another consolidation, a temporary pause that could shake out over-leveraged longs and clear excess heat from the system. And finally, in one of his clearest cautionary notes, Wu states, "In the short term, my main concerns are the latecomer speculators taking long positions while an immense amount of potential profit-taking is ready to dump, SOPR. This week's spot buying will strongly influence the next 1 to 2 months of price action. We are in a pivot zone." Wu also took time to clarify a critical metric that underpins much of his current caution, SOPR, the spent output profit ratio. He explained, SOPR is a constant readout of how much profit is transacting between investors. Once it starts rolling over, it means investors are continuing to sell even at less profit, meaning they just want out. In essence, when SOPR is high, it signals that there's still plenty of profit available to be taken, a situation that often precedes short-term corrections. Wu adds that, selling abates when there's no profit on the table, unless SOPR turns negative and we go full bearish. That means unless prices fall below cost basis and panic selling takes hold, the metric serves as a real-time gauge of how much profit is actively being dumped onto the market. As Wu puts it, SOPR is reading out how much profits are selling into the market, hence how much profits are on the table. So when it's high, you know there's plenty of profits to dump on the market. He also addressed a broader misconception that many investors still hold on to, the idea that Bitcoin's price movements will continue to follow the familiar 4-year halving cycle. Wu disagrees with that view, stating, Bitcoin is global macro this cycle, which means don't necessarily bet on nicely manicured 4-year cycles. According to him, Bitcoin is in transition, moving away from being a purely internally driven asset tied to halving-based supply shocks. Bitcoin is transitioning. Internal forces, the halvening, is getting weak, he says. Instead, Wu argues, global liquidity powers Bitcoin. Hence, Bitcoin is becoming the canary in the coal mine for global macro moves. This means that macroeconomic trends, such as shifts in interest rates, sovereign debt instability, or capital flight, now exert far more influence on Bitcoin than its own predetermined issuance schedule. It's no longer just a crypto asset, it's evolving into a macro asset class. This ties everything together. SOPR is high, suggesting large unrealized gains across the network. Speculators, who typically buy late and in FOMO, are piling in. And without a strong wave of spot buying to absorb that potential sell pressure, the market could easily pivot from bullish continuation to consolidation, or even short-term correction. The takeaway here is clear. We are not in a blow-off top, nor are we in a breakdown. Yet. We're in a transition zone, a pivot zone, as Wu calls it, where the market could go either way depending on what kind of demand shows up this week. If institutional spot buying comes back in force, Bitcoin could break through $114,000 and set up another leg higher. But if that buying fails to materialize, all the signals Wu tracks, SOPR, capital flows, speculative positioning, and divergence, point to a likely cool-down period. For serious investors and traders, this is the kind of nuanced market context that matters. It's not about picking tops or bottoms. It's about identifying inflection points backed by data and staying objective even when the price looks strong on the surface. Willy Wu isn't saying sell, he's saying watch closely, because what happens next could shape Bitcoin's price action for the next several months. In his latest update, Wu has given Bitcoin 2 more days to rally, or investors can begin to prepare for weeks and weeks of consolidation. His tweet reads, Dear Mr. Bitcoin, you have 2 days 16 hours to rally, or you're gonna print a bearish divergence on weekly charts, and then we will be bored for weeks and weeks. So, the question now is, will Bitcoin break higher and liquidate shorts at $114,000, Or will it fizzle out into stagnation and distribution? Keep an eye on capital inflows, SOPR trends, and spot buying activity, because according to Wu's models, these next few days are make or break. If you found this analysis helpful and want to stay ahead of the market with the smartest voices in crypto, make sure to like, subscribe, and turn on notifications. We'll be breaking down every key development so you don't miss a beat. Thanks for watching.